Hey everybody, this is DayTraderRockStar, and this is a very special video. Every week I do a lot of videos for members and non-members and people out there on YouTube. There's a lot of information out there. I like to try to get it all together, but what it all comes down to is a very simple set of rules. Now, we've seen this chart before. It's really the underlying foundation for what we call the high probability methodology, and letting these indicators all line up together. And it's so important to kind of drive that home. And I did a watch list this week for the members, and I just I kind of stressed on the first part of it how important it is to make sure that you have the wind in your sail and the setup is there. Now, I've been trading 20 years now, and everything has come down to a group of chart patterns that I love to trade off of, and also measuring out momentum and volatility and and divergences, and just putting this all together and letting it come to me. And when these things set up, and I see these same setups that have happened for years and years and years, and now
it's great to be able to provide jobs.
Apologize for that interruption. I don't know what that was. But anyway, coming back to it, I want to go over in this video just those key setups, and I think that this video is going to encompass just a really good a group of rules. These stocks that you see on this high probability watch list that continues to run at Day Trading Radio, and this is where we put those stocks when we see them starting to approach the levels. I'll send out these to put these charts in this list, and they'll get automated, and they'll automatically alert us to when that high probability zone is hit. And when that alert, it's important to have that alert because there's so many stocks and so many setups. And when I do the research, we have the setups, and just in case we don't follow up on them, we get the alert if they do hit our zone. So I want to show you these zones in this video on all these recent HPS setups. These are pure HPS setups that we love to trade, and you're going to see the results. The good ones, the bad ones. There's a lot more good ones. There's a few that got stopped out, but we're going to go over those also and just kind of show you what sometimes can happen. And you remember that news trumps everything. There's so much Trump news there, so I got a little confused there. All right. So let's start off taking a look at the, again, the general foundation here is the confirmed trend line. Prices on the moving average. Probably of all the indicators, the price on the moving average is the one that is the least important. Is there a recognizable pattern? Wedges, inverted, yes. Support and resistance, and wild card reversal candles. And, of course, our stochastics. Our stochastics are the main one. And with that, there's different techniques that we use on the stochastics. And, again, I teach this each and every day. Plus your overall market sentiment. That's always important to make sure you're not fighting a strong trend in the market. You don't want to be going short when the market's ripping higher, or you don't want to be fighting the trend. There is times to sell into strength, and there's times to short into weakness, but you still have to have your things lining up. That's the important part. So let's kick this off, and I hope this video over years brings you a lot of profits. All right, here we have a cheaper stock, and I kind of tend to stay near the higher price stocks, but the more important quality is that the quality of the name brand, a quality name that it's not a fly-by-night stock, it's not a pumped-up stock or anything like that. Something we can base our analysis on, but also understand that the chart means something. So this was actually a trend line breakout, and we actually came back. But what we're seeing here is what we call kind of a divergence. It's holding this retracement trend line, this little candle here. But we're seeing this higher low being put in here, even though we're kind of making that double bottom right here. So a little divergence is happening. Our buy, and again, a cheaper stock, so you're not looking at a big rotation here. And this is, you can actually see, we actually popped up here last week, depending on when you watch this video. But this just happened, and I got out $12. Since then, it's reversed. And that's the other important factor. I mean, I could give you the great setups, but unless you take your profits, it doesn't mean anything. So we have an entry criteria and an exit criteria, and that's very important. And a lot of that is based off of our stochastics. And it's important to learn how to gauge your profits by watching momentum, and then not getting into that discipline and not being overtaken by fear or greed or the excitement of the trade, but just being like a machine and taking profits when you're supposed to take profits. Here we have Disney, and again, a lot of times you're going to see off of my charts, recent trades. All these high probability trades are from stocks that I consider a focus stock that continues to be scanned each week. So we want to always continue to follow a core group of stocks, and if we do have those setups, we continue to take them, and we wait for the next setup. So actually, I did take this. This is an old alert from an HPS setup based off of the stochastic reversal candle, probably a downward channel, and that pop. So, and again, we had another situation here where we just had a kind of a coil stochastic. This pullback, as we kind of grinded down, was a divergence setup. Very slight divergence. We're seeing that sideways momentum on the price, but we're seeing this kind of rotate all the way down until we got oversold here, and then we started to bounce. And at that point, we haven't gotten overbought yet. So the trade goes in here, a very quick trade with a stop at the recent lows. And as you can see, a big pop out of that. It was a very fast trade, and this is where it is currently. So the object here is also these patterns and these setups, these HPS setups, really predict when you're going to get the biggest move and the fastest move. You don't want to be in the stock and really be chopped up here and chopping around and just waiting for something to go. We want to get in here and boom, want to move out. And that's how we get to that point, is by waiting for everything to line up properly. Here's a great example. We're just talking about a stock that continues to come into focus. Now, this is a transport. It's a railroad, CSX, and always enjoy trading it. But again, you can see the old alerts here. We had a nice, probably a little divergence or just a nice rotation back up. Remember, having the wind in your back is very important, even at this point here. And then just recently on this nice pullback. So we had a nice pullback. We waited for this to rotate all the way back into an oversold level. We came down to some really great support lines. See this little orange line right here? It came right across. So we had a support line. We had a stochastic setup. This is also what we consider a channel breakout stochastic rotation, which is an HPS playbook play, and that's a group of setups that we kind of, I put videos out describing how the setup, builds out, and then how to approach it and how to trade it. And then from that point on, we took our entry, and then we just got a nice explosive move out of there. And you can see we pushed right back up to that zone, and now it's chopping around. Here we have Bristol Myers. You can see an old wedge pattern here. I like to actually go back, show you these old patterns that break down. Once you have a breakdown here and you have a couple good pivots, you have a nice pivot up here. It eventually came down and gave us a nice pivot here. This was actually an HPS 1, 2, 3 pattern, which is an HPS setup. And then that rotation back, and again, it's just another situation where it's a very clean rotation. The downward channel is good, but what we call this is a stochastic price divergence. A little different from the divergence where you see the lower low and the higher low, which has happened right here. You see this low right here, and this low, and then this low, and then we had a low here and a higher low. Very clean and a very proper, perfect lane divergence. It's our holy grail of trades, and this is one of our perfect setups there. In this case, here's another rotation back down, but we could see as the trend continues to move down, what it normally happens is you make lower lows. You make the stochastics to make the lows too until you get a divergence. And once you get that divergence, you get that pop. That's really probably putting in the breakout that's going to come for this channel. So you're going to take that first rotation back here, and you're already seeing it. The momentum here shifting. You had a pretty decent candle. And then from that point on, you could see this thing actually blew through our profit zone. And that'll happen too. Again, remember, you could manage your trades any way you want. The important part is understanding where those entries are going to come in and why we're taking these. Confidence is a big part of trading. So even though you come up here and you say, all right, I want to take profits there. What this is telling us is that you are getting an email alert. You're getting an alert in the trader's dashboard that you're using. You're getting all these alerts saying that your price has hit this target. Consider taking profits. But if the market's doing something good or it continues to look good on a smaller time frame, yeah, it could go higher. But this is an alert system to let you know when the entry is ready and when the exit's ready. It could move. It could definitely move higher, which this one did. Great setup here. Now, this was just a couple of weeks ago when the biotechs were all lined up here, and this was another great example. It's kind of that double bottom. It was a channel within a channel, reversal candle, But the key here is the oversold stochastic, and then from that point on, it actually moved right up into our profit zone, right up against that other trend line, and actually is pulled back, and this is where it is currently. And as these things continue to set up, they're going to rotate back. I get new ones up there. You're going to see that at the end of this video, I have quite a few new setups that are still active, which are going to be hopefully going this week. Here we have a wedge pattern. A recognizable pattern is a wedge. You're already getting that oversold level. You have a decent candle there. Sometimes we'd like to see this pull back a little bit further, so we were, trying to put that stop right underneath that recent low and kind of hold that double bottom. And as you can see, it popped right up here. A target pulled back, retested that, and then off to the races it went. What was perfect here is this wedge pattern. We know that the wedge pattern breaks out, in that 65% area of the pattern. If we could extend this all the way down into a point, that would be 100%. And as we get closer to that 75%, between 65 and 75% is where we look for our breakout of a wedge pattern. So if we have a defined wedge, and then we have some other setups, that gives us multiple indicators, and that's when we expect a bigger move, and that's what we see. All right, here we had Carnival Cruise Lines here. And because we broke out of a channel here, we're expecting this retracement. We had a major breakdown. It came down to a 1, 2, 3 pattern. We pushed back up here, and then we pulled back and then broke out. So at the point, I think we were taking this on the 60-minute time frame. We just wanted to get this to pull back a little, all right, and then look for a push back up here. And overall, we always want to watch that rise in trend line that we originally broke down from. That's usually our bigger target. And you can actually see we pulled back into our buy zone. That set us up on the 60-minute time frame, which you don't see on this chart. And then from that point on, boom, it gapped up, it ran. But look where it ran to. It actually hit that trend line right to the penny, and then from that point on, pulled right back. And then we're actually right back down to this level here. So we might even look at this one again soon. But again, most of the setups are really defined, and we just have to wait for them to come to us. Let's continue on. All right, here's a good example of the 60-minute time frame, what we call a 1, 2, 3 channel. You have a defined trend line on top. You have a decent pivot here. And whenever we have a gap down and we close at that level, that's where we want to start our trend line. We never really want to start it too much, especially on a nice bounce back like this. This was probably actually a divergence setup also, which it was. We crossed back up. As this plays out and we're able to recognize, wow, I said, you know what, take a look there. We have this underlying trend line, which is nice. We have this 200 period moving average, which is nice. I would like to be alerted to if we get down to that zone. All right. What happens here is actually push up a little and then rotate back down here. But at this point, we actually get alerted to it. We actually get alerted to the setup as it comes back into that 45 area. At that point, it actually hits that lower trend line. So we're looking for it to hit it here, but in this case, we want to keep that alert active. When it comes down to and triggers, we see that it's actually flushing right out of this, and we open up right at that trend line. From that point on, it's game on, and as you can see, it's what a great setup that was. Again, I stress the importance of any type of divergence in the market using the stochastic oscillator. That lane divergence is key. In this case, we had a perfect lane divergence. We put an order right in on Starbucks, and whenever we have a lane divergence, we were talking about it right here, we started to see this start to turn back up, even though we took out the lows. Whenever we have that and we have a recognizable channel, that channel is going to be broken out of, and that's a good way of predicting, or at least taking a look at where you want to take profits on this. Projecting where you want to take profits. So let's take a look at that one. You can see this exploded out of here, went right through the profit zone all the way back up, and then we came right back down to this level. Now, I normally put the profit zones in at levels of resistance. In this case, it was back here at that 58 area, and that's exactly where we came down to. We started at 58, pushed it up a little. We came right back down to it. You could probably even trade it out again. I didn't pay attention to this one because we're always getting into some new stuff. But as you can see, it continues to trade on. and then eventually moves back down here. But that's a totally different setup, and that's not what we're worried about right now. All right, here we have one. Again, this had a very, very tight stop on it. And you're going to see if you have your stop too tight, it will sometimes go underneath it. Now, it actually worked out. Our buy zone here is 61.50 to 58, and our profit zone was 63 to 70. So that's a nice little move here. We moved right up into that 66 area. That was a great trade, and it pulled back down. But that's after the profits were taken on this. And there was another setup here. There was another big divergence setup in here. But, you know, you have to give these a good setup. Sometimes if your stop is a little too tight, you will sometimes trigger it. Doesn't mean that the setup is very close to breaking or at least moving up in the direction that you're trading it. But you could have a wild swing and kind of might trigger that tight stop you have. Here we have Darden Restaurants, and again, love the Darden the restaurant stocks currently in it right now. We've traded it back here on a trendline retracement. Remember, all the HPS setups are going to be based off multiple indicator lineups or playbook setups, and playbook setups are all on DTR's site. This one is a channel breakout and a retracement. So when you come back to that same trend line that's been so established here, it's very important to pay attention to it and continue to trade off of it. I always extend my trend lines even after they've been tested and pushed away. I keep them on there just in case we ended up coming back to them, and I want to see how we react off of them. So we did take this. This was a trade that we took, and it moved all the way back up, and then we see a little flag setting up here. And as you can see, this is a little bit more difficult, even though we're oversold. I think this one, watch what happened with this one. You know, we popped, and the high on the day, the high on that candle, looks like it hit that orange, was 66.39. Our profit zone was 66.40. So the alert was never tagged, and the email was never sent out. So it came as a stop, and it eventually hit its stop first, and that stop went out. So that will happen on occasion. You have to be very careful and always following your stock and saying, all right, if I have a good profit, but things might be rolling over, I put these in here so that everything's automated, and this thing is all, sent out automated. So there will be times when stocks will stop out also. All right, here's one of the things I always stress, and I stressed it on a video I put out this weekend. This was a Whole Food Mart, and even though it had a nice flag here, it looks like we were going to break out that flag. We were facing down on the stochastics. We had a nice run up here. Nice little run on the stochastic. We got overbought here, pulled back a little, then continued up here, and then started to pull back. And things are looking pretty strong. I like flags like this, but we were in a very bearish zone here. Anything below 50, between 50 and 30, pointing down is usually very bearish. We usually make that full rotation. So I ended up putting an alert on this against that grain, and that's something I always stress. I stress the importance of having the wind in your sail. And this, and every case that we want to take, we want to have this in the direction of our trade. In some cases, we might take it on the 60-minute time frame or have a different opinion, but the majority of the time, it's just like, it's science. You have the momentum, you have the wind, you might as well go with it. You have something working for you. As you can see, this one just got blown out of the water, and it dropped right down. The stochastics eventually rotated back down. On TradingView charts, they don't follow through on the stochastic. It's just, they've been trying to work, I think, on that bug where it doesn't follow and show you what the stochastics have been doing. But the fact is that this was not set up properly, and even though it was a nice flag, the momentum here dragged it back down, and this is where it sits today. Here we have the Bloomberg Coffee ETF. It's called Joe, J-O. And it was a beautiful channel back here. The first time we took this trade was on a Divergence. I was extremely excited about it. Banging the table and everything. We had a tremendous trade in this one from the 1750 area all the way up to the 21 area. I think I got out of it right at 20, right below 20, right as it hit our potential zone there. But it pushed up to 21. And it just completed that whole process, and it's pulled back down, and we got back into it off of that trend line. And you can see what happened here is a nice bounce off of that trend line. Now we moved up here, and when we moved up, I want to actually go back here and show you something. All right, what I want to show you here is just, the flag that's setting up. There's sometimes you could have other trend lines lining up, and all of a sudden the chart here starts to look a little different than what you plan it to look like. And again, you have to wait for all your indicators to line up. In this case, you can see oscillator up here is kind of embedded, which is kind of a bullish thing. It's starting to push back up. Multiple time frames, very important also. We had that gap down. We push back up. It's chopping around. We have this kind of a little flag here. We have probably an underlying trend line here also. That's trying to work its magic right here. So there's a lot of positives here, but the big negative is that price point here, 1750. These cheaper stocks tend to be cheap for a reason. They tend to chop around. Really want to be on your game on those cheaper stocks. Stick to quality. This one actually does look fine. I do expect it to probably play out here. And now that I just put this new trend line in here, if you guys watch this anytime soon, this trend line will be probably a very explosive move. And with this being embedded like this, I'm liking this more and more. I think this week is actually a pivotal week for this one. And you can look back, if you're looking at this video a year from now, look back at this April 30th, or the week of May 2nd, 2016, and take a look at that and see how this worked, see how this played out. I'm sure it'll be a nice explosive move here coming up. Now we go back here, and you can see I don't have that flag, but if we put this, we put a trend line down here and a trend line down here, you would see that flag. But what we have is a kind of an interesting trend line here, which you don't see on the other chart, which makes it a very interesting level right here, because we have the flag on the one chart and we have a retracement level on the other chart. Now, there's a lot of different things, a lot of terminology, a lot of things you're probably not familiar with on these trades, and they're all based on the methodology. And the methodology, like I said, is something that I continue to stress and teach each and every day. So eventually, you will catch on and get the gist of it. There are some important levels here on VF Corp here. This is an active alert, so it hasn't triggered yet. In this case, lots of times we have zones. When I feel this market is a little shaky, I want to actually, in one case, buy into strength, or at least I want to buy that breakout, especially kind of prove it to myself that we're going to get that divergence. This is a very nice reversal candle. We're almost oversold, not quite. And in that case, I want to make sure that this starts to turn back up. And for this to turn back up, we're probably going to have to get back above that 64.30 area. So that's why I put that buy trigger as a break of 64.30 and a profit of 66 to 60. I think this is a really nice trade, and it's actually one of our best bets going into this week. All right, here we have Nielsen ratings, and again, you can start to identify that pattern. The important parts are the trend lines. If you have an established trend line on one side of the pattern, it's very easy to drag that down once you start to see these tails start to form on a candle. We have, we're starting to almost put in that lower trend line there. And at this point, you want to buy it off the lower trend line. But in this case here, it's the lane divergence that is the key level here. With that breakdown and that higher low, that is the trigger. And that is one of the better setups here. And as you can see, whenever we have a lane divergence, we look for a breakout. It moved right up into our profit zone expected, and then it came right back down to that zone again, and then off to the races. The fact is, we were trading it off of here to here. And again, at this point, there's no other setups that we're paying attention to it on until it maybe rotates back down. We'll be able to put some more trend lines in and let the same setups. But you are starting to see that common denominator. The common denominator is to have similar setups and have all the pieces of the puzzle lining up. Now, this is what you get when you're at Day Trading Radio. You get this type of watch list, and like I said, I showed you. Let's take a look at this Disney right here, because this one didn't work out. Now, this was again, we've been in Disney multiple times, and this was a very tight stop. And as you can see, we came down and bounced off it once, bounced off it twice, and just chopped around it. And you know what? It is what it is. If it triggers it, it's an automated trigger. It's for our benefit. It doesn't mean that you have to get out of the trade if you still believe in the trade. It's just that this stop was too tight. But overall, it just moved right back up. It actually is a great trade, and we actually did trade this. Some cases I don't take, if it's chopping around there, I want to see a clear close underneath that stop. If we're just chopping around it, You know, that's one thing. If we get a total breakdown from it, then that's another thing. So this actually could have, you know, probably could have worked out for some people if you just held on to that zone. Just remember, stops are you know, a personal preference. I prefer to, you know, use my stops or the levels to watch based off of the patterns. So if we have a bullish pattern, what would make that bullish a bearish pattern? What would counteract that? So there might be a candle that really put in a bottom. When we talked about candlestick reversals, it's important to have that candle. Like back here, we had a nice pullback, everything lined up. Stochastic, we had that big reversal candle. So when we have a reversal candle, we put our stop right under that reversal candle, and we're probably pretty good on it. So here we had another reversal candle. This was a nice divergence too, that low and that lower low. But that was not a trade that we were on at that time, even though looking at it now, that was the best trade in a long time on Disney. But we've been catching Disney really well. So that's it. I wanted to, you know, go back, show you all these setups. These are current ones that we're watching right now, the AGN, the Verizon, the VF Corp, the Bed Bath & Beyond, Biogen, some other ones, and I'm always added to these. So hope you enjoyed that. I hope you understand that there is a path to success in the markets. It's very important to you know, stick to that discipline. Give yourself, you know, put yourself in a strong and a very profitable method, and then be like a machine. You know, take the setups and take the profits, and that's the key. There's no magic here. Randomness, you know, getting in and getting out, and over trading is going to be, you know, is going to kill most traders. So what's important here is we wait for these setups, and if I don't see anything, you know, I stress it. I said, if I don't see anything, I'm not going to bring you junk. I only want to bring you quality names, quality setups that you expect big moves on. Now during the day, we're looking for those same type of moves, but on a 1 minute time frame. So we still have those trading opportunities during the day for those scalping and day traders. This high probability setups, these are great for people who are part-time traders, or just people who would like to, you know, take their time and trade and get a bigger return. So that the methodology, everything about it, just transverses across multiple time frames. You can use it on a 1 minute time frame, which we do on the futures. We can use it on the 60-minute time frame, which we use on futures and stocks, and you can trade options against it. It works great, and I hope you gain from it. All right, I'm DayTraderRockStar. You can catch me each and every day at DayTradingRadio.com, broadcasting live markets here, 8:30 to 4 o'clock close every single day for the last 10 years. Have a good one.